Are you an investor? Do you expect your account to grow? Are you taking an income from your investments? Do you plan to eventually take an income from your investments? If you answer yes to any of these questions, you need investments that can grow in both up and down markets. That sounds obvious, but very few people know it's possible, and if they do, even fewer know how to do it. If you want to make money in up or down markets, you can't limit your investments to stocks, bonds, or real estate. Sure, they will be great at times, but don't bet your financial future on them. I was in the investment business for over 25 years, working with people just like you. I was there as our accounts grew in the 80s and 90s. And I was also there as our accounts got clobbered from 2000 to 2003. Since then, I've been retired, but now I may be able to help you avoid some of the problems we had as the stock market went from great to terrible. You might not believe me when I say that counting on the stock and bond markets for retirement income can be a recipe for disaster, so I'm going to prove it to you. And I'm going to give you a free spreadsheet I made so you can test it yourself over any 30-year time period back to 1900. The graphs you see were made with the free Historic Income Analyzer spreadsheet you can download at www.myhowtoinvest.com. It will show you things about the market that no stockbroker or mutual fund advertisement ever will. I know you're probably saving for retirement right now with IRAs, 401ks, or pension plans. Don't stop doing that, but open your eyes to some other opportunities that you need to know about if you plan on having a comfortable retirement. This is a picture of the Dow Jones Industrial Average from 1978 through 2008, a 30-year period. The green line is a hypothetical starting investment of $1 million in the Dow Jones Industrial Average with no income withdrawn. This is the typical mountain chart you see in most mutual fund ads or pictures of the various market indexes. It looks like there's pretty good growth, doesn't it? Even after the huge 2008 decline, it has grown to over $10 million. It looks like it should be able to support a 5% income. And of course, that income needs to keep up with inflation, doesn't it? This is what the income would look like. It started at 5% and was adjusted by the historic inflation factor. Not a projection of inflation, but the actual inflation itself. It might look like the income has grown over the years, but it has the same purchasing power all along the line. In reality, it probably has less purchasing power at the end because the income tax has increased as the distribution increased each year. Now let's look at the account again and see how the income has affected it. Wow, you can see that the green line has dropped substantially and left the yellow ghost of the account without an income far above. The income sure makes a difference, doesn't it? Without the income, the ending value is over $10 million. With the income, the ending value is about $2 million. There is still growth, but the difference is tremendous. Now let's make a little change. When you realize that this graph covers what was one of the best 30-year periods in history for the stock market, you might wonder what would happen if you use a different start date. That is exactly what I wondered, so I started by moving the start date back 1 year at a time. Ouch! That hurt. Instead of $2 million, now we've just got $1 million left. Let's move back 1 more year to see what happens. Oh my gosh, look at this. I moved the start date back 2 years from the original date, and the investor was broke in 17 years. I changed nothing but the start date for the investment, and it only changed by 2 years from our first example. This is devastating. It only lasted 17 years. What happened? As you run your own test, you'll see that any year can be critical. If you have a big market loss and take out an income also, the account may never recover. I use 30 years in these examples because in the U.S., one person in a retired couple usually lives into their 90s. So 17 years does not work even if they retired at 65 or 70. Move back further and you will find that many start dates are much worse. Download the free spreadsheet at www.myhowtoinvest.com and you can test any 30-year period back to 1900. You will find that 1970 to 2000 was about the best 30-year investment period in history. The second best started in 1932, at the bottom of the 1929 stock market crash. With the Historic Income Analyzer, you can easily see for yourself. You can test any start year back to 1900. You can test 3 types of income distribution: inflation adjusted, fixed income, percent of the remaining balance. You can test any income percent from 0 to 10%. You can test any fee arrangement from 0 to 5%. With the Historic Income Analyzer, you can test how your investment would have grown over any 30-year period back to 1900 when it was invested in the 30 largest and strongest companies in the U.S. You can also test how the investment would have handled almost any kind of income distribution. It will help you analyze the critical question: what kind of income can I depend on for my investments? Do you want to bet that the next 30 years are going to equal or beat the best investment market in over 100 years? I sure don't. I know that investors have to have a fighting chance in both up and down markets. After you get the free Historic Income Analyzer spreadsheet at www.myhowtoinvest.com, I will also send you videos like this to show you how to make money in up and down markets as I make them. I hope that watching my videos will help you either develop an investment strategy or a different source of income that will give you a fighting chance in turbulent markets. I know you need to be able to make money in both up and down markets. That means you can't just buy a mutual fund and expect to live happily ever after. You're going to have to take an active part in your future income, or it is not going to be there when you need it. Look at what I'll call Index X compared to the Dow Jones Industrial Average. It has practically doubled since 2000, while almost everything else has fallen on its face. Index X is a great example of an investment that makes money in both up and down markets. I'll tell you all about it in another video. Go get my free Historic Income Analyzer and get on my video list at www.myhowtoinvest.com and start learning how to make money in up and down markets. I don't sell any type of investments, and I don't give investment advice. I am no longer a stockbroker, investment advisor, or commodity broker. I'm just providing information so that you can make informed decisions.